What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 22nd of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're going to be talking about a major trap that I see many people getting caught up in when we start to get a reversal in the trend. And there are two ways that people can get caught in this trap that leads them to irrational assumptions about where price is really going to go. We've got a lot of things to dive into today's video right after our quick sponsor. And our sponsor for today's video is Lisk. Lisk is a titan in the cryptocurrency industry that's been around as far back as 2016 and aims to deliver an industry standard for JavaScript blockchain app development. With JavaScript being the most popular programming language in the world, this opens Lisk's potential developer network to millions of programmers across the world, while also providing an array of documentation and tutorials alongside its already existing network of developers, which you can connect with within their Discord community. Getting into building on Lisk is simple, and through Lisk's grant program, you may be able to get the starting capital needed to build your next best vision. And even if you're not a developer, you can gain access to the ecosystem. Using the Lisk desktop or Lisk mobile wallet, you can manage your account, request, receive, and send LSK tokens easily and get LSK support anytime. Soon, the Lisk interoperability solution demo will be revealed with all the features needed to build for the Web3 revolution. This focus on interoperability and the launch of the Lisk platform will enable the transfer of tokens and data between all blockchain applications, opening up the opportunity for liquidity to move into the Lisk ecosystem. With constant development and upgrades, Lisk expands the range of applications that can be built on Lisk and offers more accessibility to developers than ever before. Following Lisk over the past few years, I'm incredibly excited to see it enter into its next chapter, bolstering new growth with its focus on interoperability, allowing for new applications as well as new liquidity and users to come to its ecosystem. Check out the link down below in the description for a chance to become a Lisk blockchain developer today. Alrighty guys, let's go ahead and kick things off, and I want to go ahead and start by saying thank you for your patience. I'm, as you can probably tell, a bit stuffed up today, but I want to go ahead and kick things off here. Now, over the past week, Bitcoin has broken out of what appears to be an ascending triangle here. It has very clearly gotten back above, well above the previous resistance range where price had been consolidating for more than a month, and now we look like we're setting up for a very clear relief rally in price. But what I find very commonly during these pivotal shifts in markets is that you find two types of personalities. You find people who, in one camp, are set on the idea that we are still in the previous trend, that we are still going down to lower prices, and that it's going to happen imminently, and that this is nothing but a fool's rally. And then you also find other people as well, in this example scenario that we're in right now, who have now flipped their tune entirely, 150%. They've completely 180 their opinion, and maybe previously they were bearish, or maybe they were just slightly bullish passively, and now they're saying the bottom is in for the cycle and that it's time to go all in. And these two types of mentalities are what lead to relief rallies going to exacerbated levels, but also at the same time not manifesting market bottoms. And I'll talk about that as we go throughout the video. Now, as you all know, our take here, just to get to the chase here about what we think is going on in the market, is that this is a summer relief rally. It is a short-term window of time where both Bitcoin and other crypto assets are going to be recovering in price going into the next few weeks, helping us to maybe recoup against some of our losses, be able to take some chips off the table, essentially, using kind of like a poker term, essentially taking our money or our wins in this case, or lower losses into account, realizing them, and taking our cash off the table. That's what we would generally like to do here. And also taking advantage of the short-term relief rally. If we have some additional cash on side, riding the wave and not being too confident in staying in the market too long. Just taking advantage of that short-term relief in the crypto space. Now, Bitcoin has clearly broken away from these previous highs now. And the reason why it is more likely than not to, first off, just go ahead and criticize the first perspective here about, this is just a fool's rally and it can't continue climbing higher. The bearish thesis is still here. The problem with that is that it's not taking into account how this market is trading right now. For the past month, you have had people taking excessively leveraged long and short positions at this price range. And the problem with that is that no matter which direction it goes in, when it breaks out of that consolidative pattern, it is going to be exacerbated. Whatever trend direction it picks up, it will likely continue in for the next preceding days and weeks. There might be some short-term periods where it pushes sideways, but then it will continue in the same direction. Give a great example of this. When we broke out of the previous channel here, back here in May, when the bears took control and pushed us, had a nice daily candle well below any of the previous lows from the past month, this led to a massive liquidation of longs, forcing a lot of people out of their positions. And all the while, it won't be probably this exacerbated. We know that we can get something very similar to this to the upside, where we can start to force prices higher. It's exactly what happened back here during the May to July consolidation period after the first major initial correction back here from April to May. And as many of you remember, as the price was going lower and lower and people were calling for a collapse down to 20 or 10K back then, we stood our ground and we said, no, and generally speaking, we're still holding the channel here. And if we get back up to the upper band, there is going to be a major short squeeze. And what do you know? It's exactly what we got. We rallied all the way from $29,000 to $53,000. To put that in perspective, in a matter of just a few weeks, or simply put, less than 2 months here, we saw an 80% move in Bitcoin's price. Now, am I calling for that exactly? No. What I am calling for is for us to come up and retest this previous consolidative range. There is no significant points of resistance here, and the moving averages are coming straight down into this point where it gives us a perfect setup for Bitcoin to come up and retest this range here and see if it can interact with these moving averages like it did back here in March of 2020. Again, a lot of people don't think it can happen, but you'd be surprised how relief rallies can get to an exacerbated level, especially in a market where there is excessive amounts of derivatives. I'm not saying to just ride positions all the way up there to $30,000. No, I'm not saying we're going to hit exactly 30K. I'm saying that as we go up here, slowly but steadily, take advantage of this every single week. 10, 15% off the table. Take advantage of the strength in the market and slowly but steadily get your positions off the table as we go into more and more strength. And this is where I come in for the criticism of the second opinion. A lot of people think that this is the absolute bottom here in June 2018. And to be honest, I understand where many of them are coming from. We've clearly had a very dramatic sell-off here and a nice rebound at that. Plus, we really flushed out a lot of the leverage and a lot of the excessive credit that people had utilized in order to borrow cryptocurrencies to speculate, from names like Three Arrows Capital to all of the major lending and borrowing platforms in the crypto space that are going through bankruptcy proceedings and restructuring. I get why people can think this is the absolute bottom, but you can't discount the reality that the macro environment is still in effect. It is still going to suppress long-term capital allocation for cryptocurrencies if we get up back into this range. It's not going to be at a fair value that a lot of people are going to be able to put the sizable capital that is needed to support this price range continuing higher here. And I think that is why it's foolish to think that we're just going to accelerate completely higher. Now, if we start to see a deviation between equities and Bitcoin, that's a different story. We may see, and that's again a 10% scenario that we've talked about here on the channel, perhaps, if we're really lucky, we get this breakaway of Bitcoin and equities, where Bitcoin is not seen as this risk-on asset, but rather a risk-off asset that people can utilize to hedge against inflation, etc. We've obviously seen right now that the market is not treating Bitcoin like that. In fact, it has been practically spot on at tracking the trend, albeit a little bit exacerbated in either direction, following the moves of equity markets. So again, what I think is much more reasonable here is a move higher into this range. We chop sideways, try to break higher, and then we eventually move lower here. I don't know if we go to new lows. I don't know if it's going to come down exactly to any specific price range, but this is what we should think about here. Taking profits all along the way during this strength here, and even now, I would say, taking a little bit off the table. Don't try to have everything all in and try to time the perfect top and the perfect bottom. And as we go through this chop here, taking some off as well. And if we clearly get a sign of breakdown here where the trend breaks below key support ranges of the past, right? If we start to break down below that, that is going to be your telltale sign that we're ready to move lower and retest back into the lower bound range. Now, we can see, again, taking a look at Ethereum, a lot of strength here, right? This is why, again, I think it's foolish to try to go, oh, this is a sucker's rally in the market. Really? We've gotten a pretty big breakout here in Ethereum, and it's holding up on the 200-day EMA as well as the 200-day. This is not something you want to just laugh at or scoff off. I mean, this is better than any of the previous rallies we saw here in logarithmic perspective, right? This is a really critical and important rally here. It shows that the market is getting temporarily optimistic here, and it looks like it wants more. You would usually see when you have a candle like this that is almost nearly an engulfing candle on the previous green candle here, right? We can see here that we had a nice breakout here, a fall back down here. You would usually see a breakdown below here, right? You would see it completely engulf the previous candle. You would break below those moving averages, signaling that this was a pure suckers rally. This was a short-term, very short-term relief rally, and we're ready to go down to newer lows. But we didn't see that. In fact, what we saw here is buyers coming in at the 200-day EMA, which was previously resistance, now serving as new support. And the market is signaling very clearly, even if it consolidates here sideways for a little while, that it wants more, so long as it holds on this line of ascending support, which was previously resistance. Take a look here at total market cap, right? Is it too crazy to think that we could go from the $1 trillion market cap we're at right now to 1.2 to maybe even 1.3 or 1.4, right? Simply put, to revisit back in to this range that we were trading in back during May. Is it that crazy to think the price could get up there over the coming weeks? I really don't think so. It's not a major ask. We've already made it a good amount of the way here, coming from $839 billion to $1 trillion over the past week or so, right? Really just a matter of 10 trading days here, not even 9 trading days essentially, and we're still in the 9th here, right? Is it really too crazy to think that over the course of let's say even a month, or for example, 3 weeks, that we could see this? And look what's coming down here perfectly in time for that. The 200-day EMA and the 200 MA. Looks pretty good. I think this is a very reasonable setup here. And with the amount of shorts that are now starting to find themselves either underwater or losing a lot of their paper profits and still holding to their convictions, I don't want to point out names, but on crypto Twitter, you've got your typical crypto bear market Twitter accounts, and they are not letting up. A lot of them are saying this is a suckers rally, the setup is still in play. It's the same kind of stuff that you probably heard from a lot of bulls. And to be completely self-reflective, even people like myself, right? A lot of us got carried away thinking, no, 30K is unbreakable support, or 30K has been so significant it can't break, when in reality it did, right? And that's something that we have to learn from, we have to reflect from. We have to understand that with how much leverage is in this market and how directional people can get, it tends to lead towards exacerbated squeezes where people get forced out of their position because they're trying to revenge trade. They're trying to catch the next wave. They're trying to overexpose themselves. And I can tell you, while there is some leverage longs, there's a lot more people leveraged short. And we can see this here by the way the price is reacting after breaking out of this channel here. A lot of shorts getting squeezed out of their positions here at this rate. And another thing as well, just to kind of signal like why we're likely going to see some more confidence here, just take a look at total 2 minus ETH minus the stablecoin liquidity and divided by Bitcoin. This is really your broad altcoin market versus Ethereum, and dividing it by Bitcoin to get the Bitcoin ratio. Look at how resilient the strength has been here, even as Bitcoin has started to catch up. Bear in mind, we have seen altcoins continuing to move higher. That is not what we see during a very, very short-term suckers rally. This is a typical relief rally. And there's still probably room for altcoins to carry higher here, possibly up here towards 0.73 on the ratio, giving us a nice rebound still to come in altcoins. Right? Testing up towards this previous range of support and probably treating this range as resistance to signal that, hey, the market's not ready yet to move up there, and then we roll over again, right? So just kind of drawing a diagram here, right? We get one last secondary move and then we come back down to support. That's totally doable here. The clear weekly momentum here, where we've had two great breakout candles here on the weekly chart, multiple percentage point moves here, and then we're still holding those gains. If this flips green, or we get a green candle next week, it's going higher. And if altcoins are moving higher, likely means that Bitcoin and Ethereum are moving higher, meaning their dollar values are going up, meaning altcoin dollar values are going up, right? Again, and I'll let you guys know here, again, sticking to my word, we've been taking profits up the way here on some of our plays, and we will continue to do so. But as we continue to go through that strength here, we are also taking advantage of it. We made, for example, stepping into the equity markets here, a clear, decisive play as we were pressing up here against the previous bands of resistance for price since all the way back here on June 10th. And we saw the strength coming through here from July 18th to July 19th, where we set a position up in ARK. We made over a 21% return on our play. Solid trade in just about 3 to 4 days. Not bad if you can get it. And that's in the equity markets, right? So the key point here I want to bring up is that there are a lot of ways to play these short-term relief rallies. And if you can set reasonable expectations for where they can go, rather than either end of the spectrum where people think it's the bottom, we're going back to 65K, and then the other people as well who are on the other exacerbated end where they think, no, this is a sucker's rally, it's gonna go down tomorrow, the world is in turmoil. And again, either side of the equation is partially right. Bitcoin will eventually set on a bottom and it will recover back to its all-time highs, most likely, at least if we're taking a look at history. And also the bear market types are probably right to a degree that eventually this rally will subside and we will come close down to the lows, if not set in new lows, because of the macro environment. But things don't happen overnight. And that's the problem. We sometimes chase our perspective. We want to see something manifest the way in which we trade, or we are biased towards where the market is going. When you can just start to step back and realize that things don't always play out to those exacerbated perspectives, and they usually don't, and in fact are somewhere in the middle. And if you can just keep that in mind and know that those people's exacerbated opinions are going to lead price towards a specified range, you can make some pretty good money, and you can mitigate your losses if you got caught behind within this cycle, right? And that's what we're taking advantage of here, guys. Now, the thing I want to go ahead and talk about here, we're taking a look at CryptoQuant, our data science partner here. Take a look here how we came down into the MVRV ratio here. This is one of the leading data science models in the crypto space, quite accurate at finding discount periods and overbought periods in the market. We came down into this green bot area, we came down here, held down here for nearly a month, and now we have spiked out of it here. Now I know a lot of people again are calling for this to be an absolute into the bear market, but again, we just saw people taking advantage of that discount opportunity. There was enough stablecoin liquidity, enough buy side pressure to get prices back up into elevated territory. Keep an eye on these models here, because these will be good telltale signs. If you start to see a slowdown in momentum and the acceleration of them over time, they could be a sign here of when that relief rally is over. Or, again, playing devil's advocate, maybe we are wrong here. It could show you the sign here that, hey, yeah, the bear market is over, right? So just keep an eye on this model here. You guys can check out CryptoQuant. I've got a link down below in the description. They're our data science partner here on the channel. One of the best tools out there. They've got the Pro Chart feature where people can make community charts. Really great place to just kind of get additional insights outside of price analysis, as well as our understanding of the macro environment. If you want to go deeper and take a look at on-chain analytics. Now, the last thing I want to go ahead and talk about here again is a great manifestation of where I have criticism for the bullish narrative here. Now, we know clearly that Ethereum is kicking up here. It's getting a lot of momentum, and this is coming due to the fact that people are excited for potentially up in September having the merge, going from proof of work to proof of stake for Ethereum. Now, I will just go ahead and state, as many of you know by now, Ethereum has promised the merge probably 4 or 5 times now, maybe even more throughout its history, and it said that it's right around the corner many times. Engineers sometimes have a problem of doing that, not being able to properly estimate. And whether or not the merge actually happens, we need to focus on where price could realistically go as people are buying the hype and predictably likely going to sell the news. A lot of people think, and you're starting to see people talk about this now, and I think this tweet does a really good job here from Uniswap calls, with a lot of people looking forward to the merge. It is the perfect narrative for a bear market rally. People are talking about ETH potentially flipping Bitcoin, making people super bullish, and in a few months we could continue with the bear market. Don't get used as exit liquidity for longs. I think this is a very good point here. What we're looking at here is the ETH dominance divided by Bitcoin dominance chart. And essentially, if we got up to this level here, right up here at the top end of the chart, right, this would effectively mean that Ethereum's market cap is just as valuable as Bitcoin's, essentially, meaning that Ethereum and Bitcoin are at a 1-to-1 in the sense of their actual value, not in the sense of the coin itself, but the actual total value of the network. And this is something that has happened way in the past. We don't have it here on the dominance chart because the data just doesn't go out back that long, but this happened back in, I think, June or July of 2017. And many people are thinking that, this could really start to play out here where we break out here going into 2023 up towards that range after the merge. When in reality, that's likely not going to happen in a bull market. It's a great thing to chase in a relief rally to give people hope, but more likely than not, the most optimistic scenario you could get is coming up here and setting a third higher high and then getting rejected and collapsing back lower, back towards likely the 200-week moving average, like coming back down here and finding more buyers to support Ethereum, maybe doing that in the bull market the next go around. That's the kind of mindset we need to keep here. Not keeping irrationally bearish 24/7, but also not letting many traps out there flip our perspective overnight when we were just fearful back a week or two ago and, calling for the market to go lower and lower, right? We don't want to flip our tune and go, oh my gosh, the market's going we have to go all in. We're going to miss out on it. It's going all the way to the moon. That's the same kind of euphoria that led a lot of people to get trapped in 2021 and 2022. We need to keep rational, keep somewhere in the middle, and counter trade where the vast majority of people are sitting, which I would say most people are still bearish in this market. A lot of the active traders, those who are using leverage, taking excessive risk, they're the ones essentially who are going to set us up in a position where we can see higher price ranges temporarily. But after that, after enough of the party comes back into play, we need to be able to step out of the market, hold no bars towards our positions, and walk out and protect our capital. That is priority number one. So, hope you guys enjoyed this video. Thank you for being patient with me as my nose is a bit stuffed up. If you liked my rambling, please consider dropping a like. It's one of the greatest ways you can support the channel. And if you like this kind of conversation that we had here, you guys can check out the Dash Report link down below in the description, or CryptoQuant. For the Dash Report, that's where we do our trade alerts. We sent out a trade alert on our position on ARK, the ARK Innovation ETF by Kathy Wood, and that was what led us towards making that 22% profit on the trade. So not bad if you can get it. Anyways, guys, that's it for today's video. Thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.